G'day everyone, Lee here from MPG. Hope you're having a fantastic week. This is my weekly real estate market update. As always, providing you information for property owners, buyers, investors about the property market across Australia, but also locally here on the Sunshine Coast as well. So this week it was reported that the property prices, the home value index across Australia on average has increased. It's actually reached a new peak level. So back in April last year, we saw property prices reach a new record, and now we've just come back to that again now as well. So it's done a bit of a V over about an 18-month period, and we're up now 8.1%, and we dropped by about 7.5%. So we've reached a new record level of property prices across Australia. Now that's for our combined capital cities. Regional areas are actually tracking a little bit under, so we're about 2.5% under our peak back in May 2022, but we expect regional areas will reach their new record high soon as well. It's really about the supply-demand imbalance is what's happening across Australia. There's a reported 500,000 population increase, so due to migration numbers, etc., over the year of 2022-2023. So that's obviously putting a lot of demand back into the property market here in Australia as well, not only to purchase properties, but also in the rental sector as well. And we've seen rental fees increase by about 14% on average over the last 12 months, and that's expected to worsen. So unfortunate situation for buyers and also people in the rental space as well. I'd expect that prices will probably continue to increase, and also rental fees increase as well. It's a bit of a double-edged sword for property investors at the moment, because a lot of investors are looking at their mortgage repayments and going, geez, that return on investment just isn't worth it. So we're actually seeing a lot of investment properties come to the market as well. At the same time, we're seeing investor numbers online searching for properties increase. So it's actually up nationally, a lot more investors in the property market. It's up to about 21% of property searches are from investors, particularly in areas like South Australia, Western Australia and Queensland. So South Australia is sitting around 29% of properties searched online are from investors. Queensland's about 27%. I think Western Australia is about 25%. So investment activity is certainly back there. But those regional areas are where the investors are looking, because the return on investment is generally better, because property prices and affordability is better in some of those regional markets as well. And on top of that, the tax incentives too for investors in those areas are better. So if you look at a $600,000 property purchase in Victoria, attracting about $33,000 in government fees, as opposed to Queensland of about $22,000 in government fees, it makes a lot more sense for those investors to look into those areas as well. So it's expected that will worsen over the coming years as well, unless we do something about that supply situation. So interestingly, a report by Matusik, which I've shared in this week's blog as well, the population increase in Australia at the moment is one person every 47 seconds. So this is more accommodation that we'll need to supply moving forward. So lots again to unpack, guys, in this week's real estate market article. What's going to happen in the next 12 months? It's very unpredictable. A lot of people ask me this question. I'm not too sure what will happen. I think we'll see the rate of growth with property prices slow, because the RBA is increasing that cash rate, and that's certainly putting a dampening spirit in consumer confidence. A recent report by ANZ Roy Morgan has showed that consumer confidence has sat below the benchmark of 85% for 43 consecutive weeks now. So consumer confidence is lower. However, they did report that last week consumer confidence was up 2 points to I think around 76 or 77%. So it has increased slightly. And as we lead into Christmas, I think that'll influence that figure as well, because people will be out there spending their money in celebration for Christmas. But what will happen in the new year? Usually we see after Christmas, everyone spent their money, so they stop their spending. I actually think the reverse might happen this year. I think we might see an influx, particularly in the property market, of buyer activity in the new year. And towards the end of next year, I actually think that cash rate will drop down about 1%. And Matusik sort of reports on that as well. I think the RBA realised that they've put up the cash rate too high, and that they'll end up crushing or crippling the economy, which is certainly something they don't want to do. So it'll be interesting to see how that plays out in the property market. But I think the thing to keep in mind is, despite all the cash rate rises, if supply doesn't keep up with demand, we're going to have a resilient property market here in Australia continuing for the years ahead. So that's my report this week, guys. Check it out at martinlitzy.com.au. And as always, if there's anything we can help you with, give us a call. Have a great week.